having a look at the charts and where we stand at the moment. We've just seen some European data come out. We've had your French composite PMI data come out, your German PMI data come out. We'll review those in just a moment, but in terms of the reaction, the French numbers were in line, German numbers were a strong beat, so we've seen some immediate upside in euro-dollar. We were just at the R1 level, just coming into that data set. Nice little pop higher on a technical break there. If we look at where we're trading, this was what was deemed to be the hawkish Fed meeting, where we saw quite a sharp downtick in your euro-dollar currency pair, which I'm sure Draghi was smiling about for a whole one day. We saw a drop of 1.45%, so substantial move there, and I'm sure Draghi was pleased with that, obviously taking the pressure off him because the euro is then weakening against the dollar, and that means if he continues to be hawkish or sort of follows the path of tapering his quantitative easing program, the upside in euro-dollar currency pair wouldn't take that much of a toll on the eurozone area as a whole. But then if we look at what was happening yesterday, the dollar weakened throughout the day, ultimately retracing by the end of the day. Let's just have a quick look here. From its lows, managing to reclaim 0.75, so about 0.5% of that move. Dollar continuing to weaken coming into this session here, just breaking above R1 on the back of those good German data, so 1%. So net the euro is basically, I'd say, it's close to flat. We're still trading within the intraday range we saw pre the Fed. So Draghi is not going to be too happy here, but this is something that we can't deny anymore. The euro area is recovering, it is strong, it is healthy, and this does result in a stronger euro, and I think Draghi is taking it pretty well so far. I don't think this will change anything in terms of his outlook for future monetary policy. But if we look at cable, which is going to be an interesting product to be looking at today, cable has now fully retraced. Well, back to test the pre-announced levels we saw just ahead of the Fed, just over here, just managing to find some resistance there for now, but quite a powerful move on the upside yesterday. This was also driven by there was the BBC report which claimed that there was going to be a $20 billion equivalent transitional payment. That saw some upside in sterling. I think even if that number was 50, 60, 70 billion, we would have seen upside in sterling. At the moment, there's so much uncertainty regarding Brexit. No headway has been made. Anything to sort of give us an indication to where our economy stands going into the next year and a half would be seen as sterling positive. But sterling managed to reclaim that dollar strength, not managing to prevail. Market expectations are still there for a December hike. So it's going to be interesting to keep an eye on cable today. Largely range-bound markets. 215 is the main event, and we'll touch upon that in just a second. Otherwise, just looking at the DAX, having closed the gap, just breaking above it technically now. Pivot, next level of resistance. That euro move to the upside started to subside. In terms of our risk assets, well, the reason we had such a big gap lower in the DAX and other equity markets was overnight we had same old rhetoric we hear from North Korea. So Donald Trump imposed more sanctions on North Korea about businesses, companies and banks doing business with North Korea or America. This was sort of supported by China. I don't feel like China's going to enforce that, however. And as a result, North Korea came out and said Kim Jong-un has threatened the highest level of hardline countermeasures in history, with his foreign minister suggesting that this could include testing a hydrogen bomb in the Pacific Ocean. So this is back to the nuclear situation, but as you can see, no real sustained move in your safe haven pairs. We're now getting quite comfortable with this sort of continued rhetoric. So immediate risk off with the DAX gapping lower, gold trending higher, but nothing sustained. We're just testing the 1300 in gold at the moment. What more is there to say about this? Well, it's just North Korea being North Korea, and America is trying to impose sanctions which have very minimal effect unless they have China's backing and support. 80% of trade from North Korea goes through China, so unless we see China take a really hard stance on North Korea, which of course is not in their interest, we're not going to see any of these sanctions really surmount to anything in particular. But what again, I'm maybe a bit skeptical here, but I think sooner or later Donald Trump is just going to get fed up with the fact that he's not being taken seriously by somebody he doesn't take seriously, and this could result in some further escalation. But on the back of this, we saw the Nikkei close down 0.35%, the Kospi closed down 0.82%, and the Hang Seng down 0.84%. So there was some downside in Asian markets. I don't think this particular comment is that dangerous, but I think what would be most worrying is that under even a minuscule threat of nuclear war, if equity markets didn't react, I think that would be the most worrying thing I could think about. We already know, or I think majority of the market feels that we're complacent. If a day like that did come where North Korea is threatening to test a nuclear missile and we didn't see downside in equity, then we need to start thinking about how we are treating these equity markets and how we are nursing them. That's North Korea out of the way. Let's have a quick look at the European data, just because this ties in quite nicely.
So the Russian energy minister is stating that they are discussing...
Sorry guys. And Scorch has vanished.
Oil exports are coming.
Okay, not too important. So just looking at the data that came out, we've had the French PMI readings, the manufacturing services and composite. They were largely in line, 56 compared to 55.8, 57. Services was actually quite a bit of a beat. There was no immediate market reaction here. Market is just waiting for the German PMI data. So the German PMI data came out strong on the manufacturing, strong on the services, therefore the composite coming in at a very strong reading. Germany obviously being a manufacturing hub, the manufacturing number is more important, which is the opposite for UK being services, where services is more important. Now we can see we had quite a strong print here of 60.6. This puts us at the best level since 2011. Germany being one of the strongest economies, well, the strongest economy in the Eurozone. This is obviously going to support Draghi in his hawkish commentary. No doubt supported by the cheaper euro, but I think this continued recovery in the Eurozone is definitely going to be resulting in more euro strength, and this euro strength really hasn't seen any filter through into your PMI datas or your soft datas, where this is confidence data. Ultimately, how confident are your purchasing managers index, and with the stronger euro, we're still tracking at all-time highs. Now it's worth noting that the France and Germany are the two biggest economies there, so your euro area manufacturing and services will be less significant, as you've already had German and French data come out. So that's what's been happening so far. Let's talk about the day ahead. Now the day ahead we have the much anticipated Mrs. May's Florence speech, which is at 2:15 today. There's been quite a bit of speculation as to what's going to happen here, what she's going to say. I was just discussing this with Ant. Quite a bit of uncertainty regarding this, because this talk about 20 billion euros for 2 years or its equivalent, it's not something that she can announce. She can't just come out today and say, we're going to pay Europe $20 billion to have access to the single market for 2 years, because Europe has to sign off on this. So what that number 20 billion was circulated yesterday in the BBC report in the afternoon, according to Deutsche Bank, and that means that number is out there, so traders know about it, investors know about it, but it's not a solid claim made by her, which means that when she comes in today, that number is already circulating in terms of where the market is. But it's more about her tone and choice of words she's going to use. She's stuck between a rock and a hard place in many different ways, but one of the ones being more significant now is, I think she's come to the realization that a soft Brexit is definitely more beneficial for our economy, but then she's got sort of hardline Brexiteers in the Tory party as well, being the more conservative party as a whole. She needs to try to cater to both, one which is Europe, which is obviously the people we're signing the deal with, and therefore we need to be loving and affectionate and kind towards Europe with our communication to them, while at the same time she doesn't want to be too soft, kind and loving, only to then see that when her Tory party conference, which commences on the 1st of October, you start to see her getting torn to pieces by the hardline Brexiteers. So I think this is just going to be trying to butter up the EU. But communication has been very important previously from Theresa May when she outlined the 7 principles of Brexit. We saw one of the biggest intraday moves higher in sterling currency. So I wouldn't underestimate the power of her communication, but if we're looking for her to make it definitive, we're going to pay X amount for the divorce bill, or we're going to pay X amount to remain in the single market for 2 years, I don't think that's going to come today, and I don't think the market's expecting it to either. But what she will be doing is lining herself up for the next 2 events. One being the 25th of September is when the 4th round of negotiations starts. And I hope and pray we can finally come to some sort of agreement about this divorce bill. And to do that, she'll obviously need to make sure she's on good terms with Europe. So that's the next real event in terms of Brexit. And then following that, the 1st of October is the Tory party conference. Now, even if she is too soft Brexit, I don't think there's much of a risk to her leadership. Not because I think she's a great leader. I don't think anybody thinks she's a great leader at this point. It's more to do with the fact that nobody wants her job. Nobody wants to deal with what's going on. I think there was an interesting little statistic here that Anthony was sharing. He said, on the day of Theresa May's big Florence speech, BMG poll for Independent finds that by 52 to 48% majority of voters now want to stay in the EU. I think that speaks for itself. I think people's ultimate reasoning for initially voting to leave hasn't changed. If it was economics, if it was politics, if it was social, those reasons are still there. I think now that the actual enormity of the task is apparent, people just don't want any of it. We're months and months and months in, and we've made zero progress whatsoever. So you can see that this ultimately is going to be weighing on Theresa May as well, that she knows that even the public are so fed up with this that they just want this matter gone and dusted, and that's something which is really out of her control, for now at least. Okay, so what else did we see yesterday? Yesterday we saw a downgrade in China's credit rating. There was some talk about this in the market, but this was of no real or significant surprise. So we saw the S&P has downgraded China's sovereign credit rating for the first time since 1999. So it went from AA negative to A plus, which is stable, citing that prolonged periods of credit growth has increased China's economic and financial risks. Well, this is understandable. Chinese economy is growing, and to support that incredible growth, they've needed to be fueled by credit. GDP. Let me just show you China's GDP. Not growth rate. There you go. China's GDP. Max. This is amazing. One of the trainees was showing me this yesterday. I used to show the United States, which is just not as exponentially growing. It's more sort of linear in its growth, but this is China. It has just exploded, and this is fueled by a credit. You need to borrow to invest, and that investment then yields a return, and then you want to grow further, so you need to borrow to invest and borrow to invest. So look, credit is not always bad. This has resulted in actually one of the fastest economic growths in history. So this downgrade is of no real surprise. Of course, there's risks associated with having a lot of debt on your book, but we've seen that Moody's downgraded China back in May, and now both agencies, according to Deutsche Bank, effectively have the same credit rating for China. So there's no real market reaction there. But yeah, just one more time, look at that. It's phenomenal. Okay, and in terms of other news, we saw some moves in the commodity space last night. WTI oil was largely unchanged, but what really did move was iron ore. So iron ore fell 5.11% on growing concerns that Chinese iron ore stockpiles are rising. How is it significant for our day-to-day trading? Well, I've shared the chart of Australian economy, and about 50% of it is iron ore and minerals. And this was obviously caused sort of quite a strong downward move in the Australian dollar, undoubtedly. So we're tracking down at lows. This is something I'll be watching. Iron ore being one of the key exports for the Australian economy. Now, in terms of data for today, we've had quite a bit already come out. We've had the French PMI and the German PMI data. 2:15. What we're going to have is our Florence speech by Theresa May. Definitely be keeping an ear out for there. I'd be avoiding cable ahead of this data set. This event. Just looking. Well, I'd simply say leave sterling alone unless we get some sort of headlines. And then coming into the afternoon, let me just show you the calendar. So 1:30, we have quite a large number of Canadian data coming out. So we have our CPI, so we have our inflation readings, we have our retail sales. This is going to be an extremely volatile period for the Canadian dollar. If you guys are CAD traders, as with any data set, with any such huge data set, understand the totality of all the data before getting involved. You've got your 2-3 phases of trading such events. You've got your knee-jerk reaction, and I'm sure your knee-jerk reaction will be first felt on the inflation numbers. So keep a close eye on that. Be quite pragmatic with your exit. Get in, get out on that first wave. Then we're going to see a flurry of other data coming out, and then we may see a second reaction on the retail sales. Obviously, retail sales being a lead indicator to future inflation expectations. If people are buying more, then we'll see inflation start to creep up. So that'll be move one, that'll be move two, and then it'll be sort of combining, okay, CPI was bullish, retail sales was bearish, there's one outweigh the other, and then the market will generally find a trend. So be careful around this, around this time at 1:30, if you are trading the CAD. Coming into the afternoon, 2:45, we have the market composite flash PMI readings, the manufacturing and services PMI from America. These are your flash readings. These are going to be extremely significant, so keep a close eye out for this data set, and this is going to be a main risk event in terms of US equity markets. The afternoon is basically done. 9 o'clock we have the European data, so just your European area services and manufacturing PMI. I'm going to try to wrap up just before that, but like I said, we have the German and French numbers have already come out. Then coming into the late afternoon, we have our Baker Hughes rig count. This is obviously significant. I was discussing oil prices with Max in the chat yesterday. I'm quite excited to see where the oil market goes once we see some normalization of the weather patterns, once these hurricanes and maybe even earthquakes to some extent, and all of these unnormal weather conditions sort of go to the back of people's minds, and we then resort back to pure statistics and numbers such as your DOE reports weekly. Then I'd be interesting to see if oil can actually manage to sustain itself at such elevated prices. Plus we're seeing to some degree an extent of dollar strength, which is ultimately going to start to weigh on oil prices. The oil market has seemed to start consolidating. So that's your data for the day. But let's have a look at this. Look at your speakers. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 speakers today. So pay attention. Pay attention. Be switched on. Have Squawk turned on. Have keywords. I think a lot of the times when you're working in the office, and the experienced guys know this, the Squawk is just on in the background. Unless you know we're coming into 1:30, you start perking up attention. The one thing I find really interesting and sort of remarkable is when one word is said by the Squawk, such as inflation or QE, and it's just not expected, how quickly everyone just runs to their desk. And this is something you need to train yourself for. Have words in the morning where you're thinking, if I hear this word, I'm going to start paying attention. But these are all scheduled speakers, so there's no excuses. We have 8:15 ECB, my pronunciations are awful, court, Dove speaking on 20 years of stability. Anthony. So we went to go see Sir Clive yesterday, and as you guys know, my knowledge of celebrities and sort of especially knighted people or anything is very, very minimal. And he was talking about teacupping, just basically being prepared for all eventualities. So that is definitely what today is about. We've got Dove speaking, we've got Hawk speaking. Just be prepared for every single eventuality. So ECB commentary coming out today. We have some Fed commentary coming out today. ECB Constancio Dove giving closing remarks in the ECB conference, low inflation lessons. Okay, so this is what I think is going to be quite important. ECB Constancio being a Dove talking about low inflation lessons from the past, lessons for the future. 8:15 ECB speaking at 20 years of stability conference. Fez, you did say teacupping, didn't you? Yep, I absolutely said teacupping. I'm going to leave it at that for now, Fez. Coming into the... okay, so yeah, look, guys, be prepared. Be prepared for every single eventuality. If a dovish person says something dovish, don't be surprised. If a hawkish person says something hawkish, don't be surprised. But what you do need to plan for is that we have 3 doves speaking, and of course we have Draghi speaking at Henry Grattan lecture at 9 o'clock. When he's talking to sort of students, it largely becomes irrelevant. But we have a speeches going on today. So keep an ear out, stay sharp. We'll see some headline price action. One thing I would say going into such events is headline price action is a lot more violent than sort of predetermined data releases. This is because a lot of the times the market has no idea what to expect going into this, so they'll hear one word, everyone just piles into a trade. We see an explosion higher. Don't be that guy trying to go long the top or going short the bottom. If you've missed it, you've not been behind your desk, and guys, this is for the interns completely and utterly. If you're not behind your desk and you've missed the first few seconds of this trade, leave it alone. Okay, you'll see violent reaction, quick profit taking, but otherwise it does seem to be a promising day. So best of luck, guys. There's 4 minutes till we get the European area PMI data sets. Thank you very much and have a good day.